Welcome to this explainer. Okay, so you probably already know you've got a bank account to securely stash your hard-earned cash, right? And if you've been looking into investing at all, you might even know that a demat account is what holds your investments. But let me ask you the ultimate beginner question. When you actually want to go and buy or sell a stock, which account are you actually using? Well, that is exactly where the trading account comes in. And today, we're going to make this completely crystal clear for you. You see, you can't just, walk right through the front doors of the National Stock Exchange or the Bombay Stock Exchange with a pocket full of cash and ask to buy shares of your favorite company. I mean, it just doesn't work that way. You need a highly specific digital tool, a regulated access point to place that order directly on the stock market. And that, my friends, is exactly the problem a trading account solves. Okay, let's dive into this. A trading account is basically an online platform provided by a SEBI-registered broker. Think of it as your personal control panel for the stock market. It's what allows you to place those buy and sell orders for stocks, mutual funds, ETFs, the whole shebang. It's kind of like the checkout interface when you're shopping online, right? The checkout cart doesn't permanently store your items, and it definitely doesn't hold your bank balance, but it is the absolute 100% required gateway you have to pass through to actually execute your transactions. Section 1, 3 accounts working together. And this brilliantly illustrates how the pieces fit. To really understand how this works and to avoid that confusion that almost every beginner faces, we need to look at the bigger picture here. Participating seamlessly in the stock market actually requires a triad of distinct, interlinked accounts. First, your bank account holds your money. Just think of it as your wallet where you add or withdraw funds for investing. Second, the trading account. Now, this holds absolutely nothing. It's purely the gateway. It's the shop counter where the actual transaction happens, where you instruct the market on what you want to buy or sell. And finally, the demat account holds your shares and securities. This is your digital locker that safely stores your purchased investments electronically. Section 2, the step-by-step buying process. Let's move to and see how this builds. Now that we know the theory of the wallet, the shop counter, and the locker, let's put it into motion with a real-world example. Just imagine you want to buy 10 shares of a company. Step 1, you make sure you have the required money ready in your linked bank account. Step 2, you log into your trading account and place a buy order for those 10 shares. Step 3, your broker instantly sends that order through your trading account to the stock exchange, where it matches you with someone willing to sell. And finally, step 4, once the trade is executed and the money is transferred, those newly purchased shares are credited directly into your demat account, where you officially become the legal owner. Now, one quick thing you should know is that those shares don't just magically pop into your digital locker instantaneously. Under India's current system, we use what's called a T+1 settlement cycle. The T stands for the trade day, literally the exact day you click buy on your trading account. The +1 means 1 working day later. So your trading account executes the order and locks in your price today, but your demat account officially receives the shares by the very next working day. Make sense? Now, what's really interesting about this slide is seeing how it actually looks. In practice, a real-world trading terminal looks like an online order book provided directly by your broker. Notice the open orders, quantities, prices, and trade execution options there. It is not a physical vault, and it's not a bank ledger. It's a dynamic digital control panel built specifically to interact directly with the stock exchange on your behalf.
Okay, but what happens when the stock price goes up and you decide it's time to take some profits? Well, the exact same process simply runs in reverse. You log right back in and place a sell order via your trading account. Once the exchange executes your trade, the shares safely leave your demat account and the resulting money arrives right back into your linked bank account. Your trading account basically facilitates the entire round trip seamlessly.
Section 3, why you need it and how to get it. At this point, you might be thinking, man, this sounds great, but managing 3 completely separate platforms and keeping them all synced sounds like a massive headache. Don't worry, the financial industry knows this, and they've solved this problem beautifully. You rarely have to juggle multiple apps anymore. Today, most brokers offer what are called 2-in-1 or even 3-in-1 accounts. When you sign up online, which by the way is a completely paperless process that usually takes less than 15 minutes using just your PAN and Aadhaar card, the broker automatically opens both your trading account and your demat account together in one seamless package. They then link it directly to your existing bank account. Behind the scenes, the broker's platform handles all the coordination. You just log into one single app and you are ready to invest. Section 4, recap and quick quiz. All right, let's wrap up everything we've covered today with a quick knowledge check to make sure this financial jargon is officially demystified for you. Here is your quick quiz. Let's say you want to buy 5 shares of a company right now. Which account do you use to actually place that buy order? Is it your bank account, your trading account, or your demat account? I want you to actively engage with this. Go ahead and write your answer in the comments right now to prove to yourself that you've mastered this concept. So the crucial point is simply this. Your trading account is strictly used to place buy and sell orders. Your demat account is the digital vault used to hold your securities electronically. And your bank account? Well, that handles all your money transactions. They work together as a perfect trio to help you participate in the stock market. If this explainer finally made trading accounts easy to understand, please hit like and subscribe for more simple, visual stock market lessons. And hey, don't forget to answer today's quiz in the comments. But before we go, here's something else to think about. Now that you have the ultimate control panel to buy stocks, what exactly is the first stock you're going to buy, and what strategy will you use to pick it? Let us know, and maybe we'll cover that in our next explainer.